All right, all right. Listen, it's 6:31. Usually don't do a 6:30 club on a Friday, but guess what? It's been a weird week where I've had internet problems. I had to be in the city, I had to be at home, I had to be in New Jersey. So it's been pretty flexible, and I feel like I missed one or two this week. So I figured, you know what? I didn't get to bed too late last night. I got up nice and early, so let's get prepared for the day. And it's been a volatile week. My name is Scott Redler. I'm the Chief Strategic Officer. What am I? I'm the Chief Strategic Officer of T2Live.com. This is the 6:30 Club, usually Monday through Thursday. I try and go over what the market's overly focused on, what the narrative is, where we can make some cash flow, how we can position ourselves midterm, long term, and have a little fun along the process. You tuned in for yesterday's happy hour. It's good to have you. I've been open house this week where people are testing out the alpha team. So yeah, I did a little lesson, a little history, a little back and forth. It's always fun to do with friends around the world that like to maneuver and manage themselves in the markets, like-minded. Let me see if it'd be nice if this is working today. Let's see. I think it is. I think it is. Hold on. Oh, look at that. It shows that I'm live now on that. I didn't know that there's a little circle. There you go. Anyway, hope everyone managed this week pretty well. I think if I were to give myself a grade, I'd probably give myself a B for managing the week, considering that I had risk down, very tactical. I've my 4 work accounts that I get paid on for a living, pretty much all cash. I think some traders made really good money shorting on the day, the Fed day. Higher for longer when the market closed on the dead lows. And yesterday you had some nice downside follow through. So if you short things that close in the lows with volume, you got paid. And if you get out of the way, you didn't have to deal with, yesterday's action. There wasn't much of a bounce. This morning, the futures are up a bit. The oscillator hit minus 49. So I was telling people, they're like, oh, we're going to crash on Friday. I'm like, the really good setup was going home short Thursday. I mean, that's Thursday, Wednesday into Thursday. And now, after 2 big down days, they could easily retrace a little bit and then still go lower next week if they want to. It's not a great take home. So anyway, things are bouncing. So this isn't the best setup either, where I feel like if we were down one more time in the hole, it would have been an easier trade to buy to go from red to green. So now you probably just have to take things a little bit slower. What do I mean here? Well, this is the S&P cash. Okay, part of the lesson yesterday was, those of you who know me for a long time, I've been doing this for 23 years. When the SPYs and the S&P cash are below the 8 and 21-day moving average, which are momentum moving averages, you don't have a ton of positions. Okay, when it's above it and the sequence is higher, I'm usually in 10, 14, 15 positions using my tier system, managing and making great money, having a bit more fun. And when we're below it, and in a corrective phase, I try and be in a ton of cash and opportunistic into spots, maybe a little short here and there, and testing some things out. But again, when we're under pressure, I try and just be a little bit more flexible. This is a good song, actually. Remember this one? Cheers to Friday. Anyway, so you look here. If you do remember, last Friday was the day that this market really changed. Okay, we were tight, we were wedging. That Thursday, remember a week ago Thursday looked like we were ready to go, and then boom, they stopped me out of most of my risk right here. And then what happened? We were below the moving averages every time we rallied up to it, we failed. Remember, I'm like, if we can't get back above, if sellers want to keep control, 44.66 or 44.79. And PS, it stayed below that, and then this was Wednesday. This is when Powell came out with this message saying, hey guys, I mean business. Stop saying I'm going to cut a point, before I even raise one more time, with gas prices and home prices and, wages and strikes and, they have to, they have to be higher for longer to bring out this excess as the world tries to normalize a little bit. But anyway, so here was this wide range bar that, that if you didn't get out of the way with certain things, you had to get out. Some guys got short, and if you did, you got paid nicely. Okay, now we hit a low of 43.29, which was below the summer low, which was on August 18th. Some people are like, hey, Red Dog, did you put your wife's blood in the street account to work yesterday? I did not. I did it right here, if you remember. And then remember when I came back from where I was in Spain, I'm like, guys, if you put a big portion of your swing account to work, not because you don't have a blood in the street account, into this move, I'm like, definitely take some off. It could be a lower high, etc. You're going to sell your blood in the street account? I'm like, no. I usually use that for bigger moves, and I only have one tier to 4. So anyway, what would I do? Maybe if we had to move down towards this 42 to 42, 41 area, in time. The question is, everyone's always like, sell Rosh Hashanah, buy Yom Kippur. That's been like a statement that's been in the market for decades. Well, this was Rosh Hashanah, so they definitely sold Rosh Hashanah, and Yom Kippur is, I think, on Monday. So the question is, on September 25th, is that going to be the low of September, October? Probably not. So chances are we might get a nice chance to be, a buyer of, like a blood in the street account or a longer term into this whole area. So we'll see. At this point, you have a big gap to the downside. So sometimes, you come up and want to retest that before rolling down. We're very extended from all these moving averages. So, we could get some kind of choppy-ish bounce. The best thing would be if we didn't, but we'll see how it goes. Bottom line is, this is 43.75. That's your resistance. 43.35 is the prior low. It's only, I would think that, if the bears want to keep control, they keep it below this spot, kind of like when it kept bouncing into the moving averages before heading lower. This would be, the choppy spot if it wants to work that off. And here is, the 200-day and a move into this area. I show the chart on the weekly basis sometimes because, weekly charts matter too. And, basically this inside range broke to the downside. Okay, look at the size of that candle. What do we do so far? We remember this 43.25 from a year ago. Well, we just broke this trend line. We broke this upper area, and now we'll see what happens next here. You have a bunch of levels. Again, here's 41.95. Here's 42.37. Here's a little bit bigger area, but we'll see. Some people are like, hey, Red Dog, do you think we're gonna have a fourth quarter rally? It's the big question. Fourth quarter rally. I'm like, we could see 41.95 to 42.37, and then still, I think, just probably rally back to where we just broke down from. But if we did not hold this area in the next few weeks, chances are everyone that predicted a recession in the first and second quarter and got it wrong because we had a huge rally, now everyone that's predicting a fourth quarter rally, might go the other way. I'm not saying it will. I'm just saying, sentiment's been very wrong. But the patterns have been pretty right. You look here at these patterns, okay, sometimes, you look at past history. By the way, this was, I put the blood in the street account twice here. Remember this head and shoulders top that broke the neckline there, gave you a big move down. Remember this was that summer rally that I think Morgan Stanley Wilson was bearish as hell and he squeezed the hell out of shorts. But anyway, here was your inverted head and shoulders pattern, broke here, bop. This is where we are. So you want to kind of write this stuff down right in here. It should hold. I don't even know if it gets on there. I'm just trying to give you a bigger picture. Sometimes it's a Friday, right? Big picture Friday. Cheers. Anyway, question is today, does early strength hold or somewhat fade? We shall see. So let's go back to the daily charts. Let's go to the Qs because the Qs matter. Qs also broke this, this inside wedge. Okay, right here. Remember when it broke below, what was that, 373-ish? Came down, retested the break, and look at the size of that candle on Wednesday, which led to yesterday. So now what? First of all, it's right in yesterday, 357.69. That's this right here. That's yesterday's low. The Qs are bouncing a little bit, so not quite giving you, downside follow through, but they did that on Wednesday into Thursday, so they really do the same thing twice. So here's the Qs. The Qs are at 359.25. Okay, this low is 361. Okay, so this probably will be some, resistance. If if we hold today and go, that's probably where the bounce could take you. Sometimes you can go like this. and here's the Qs. Okay, and then you take a look at the daily chart from yesterday. So we did break down in the last hour. So maybe it wants to take that back, which is into here. You could also even like kind of draw this little downtrend. So sometimes it's good to like figure out where it can go. So this would be a big congestion area. So that's probably, if you're playing a bounce, you probably want to, hold on, you probably want to be careful into that. So anyway, that's the Qs. So there's another $1 there before sellers, come back. And if they want to, push the envelope a little bit, then you have the gap here, which I don't anticipate us getting back up to. This is 361.70, but we'll see. The Qs did not break the summer low, so there's still a little relative strength in the Qs, but I'm telling you, there's nothing really so special. I've watched little by little in the past 3 weeks momentum come out of these mega cap names that went from special to wow. That's how fast it moved lower. Starting with Netflix. Netflix was looking great, and then boom, a change like that right here. This was looking like a nice bull flag. Maybe it was going to fill the gap, and then this candle said, get out of it actively. Get out! And then this candle, you could have got short, and then PS, it's been trending down since, all the way down to almost a 200 days. So this move basically said, hey, the quality names that show leadership at times, because that's what it did here. This Netflix and Tesla like basically led the May rally. That was a great rally. The second quarter was awesome for me. But anyway, now what? It's just choppy. Like yesterday, tried to bounce a few times. So this up open, probably, not the best one to do anything with. If you look at Netflix right now, Netflix probably up like, I would say $3 this morning. I'm just guessing. Let's see what's Netflix doing. It's up $2, so $2.86. Remember yesterday it was up like $8 in the first 3 minutes, and then it just faded the rest of the day. So what was this high here? This high is $3.95. So that's the resistance area there. Hasn't been great. So that broke, right? And then you had Apple, that hasn't really been acting so great. It's up $1 this morning. I think Apple will be interesting to see. Does it hold or fade? The iPhone 15 is released everywhere, and there's some pictures of everyone buying it in China, and it's supposed to be banned in China, so maybe that helps it. Bottom line is, you look here, and maybe you could put this line here now. But this is your 8-day where it was rejected. This is 176.30. So, the longer it stays below, if this doesn't get back above this 176-ish area, chances are this, this key support breaks, and if this key support breaks, that'll give you some clues that there's some more downside, for tech. So for today, Apple's 175.01. Some people might say, hey, I'm going to fade it to go green to red. If that's the case, just know that this is, really the resistance spot, and then you get into this whole area. But chances are it doesn't get that high, but we'll see. So what you want to do is, again, you want to map out where can these things have a little bit of a bounce to, if they're going to bounce, and that would be the first. I like to be a little perfect here. So that's that, and this low here is what? 177.13. So this would be the area, that it could bounce into. If the sellers want to make an H-cell setup pattern into next week, then it breaks that. Anyway, Microsoft was a little bouncy yesterday, but still, just horrible pattern. This broke the ascending channel right here. Became very loose and wide yesterday. It's probably up a little bit this morning. Nothing so, up $1, 320.69. Went as high as 324. So could have an inside day. Thank goodness on Tuesday I was like, guys, I'm selling my swing account on Google. Like, why? It's acting well. I'm like, why would it continue to act well when Amazon lost special status, Microsoft lost special status, Apple is in corrective mode, Netflix got hit hard. It just didn't feel right. So anyway, it was a good sell. And then if you didn't, you had Wednesday to sell when it broke this 136.24. And now what? You have a big gap here. You have big support there. It's probably up a bit this morning. There is some talk that actually TikTok's going to put it in its search engine. It's only 55 cents. Anyway, so looked good, right? Trending, broke right there. Trade changed. Get out of the way. Tesla also, started to change. What do I mean by change? They didn't change the name. They changed the trade changed. Okay. This was awesome, by the way. Back in May. May was such a great month. Anyway, that's when it was above the 8-day moving average, showing momentum. You could have played it, and then it went into your corrective phase. Looked good again, and then now it's just just a trade here and there. Why is it a trade here and there? Well, let me get some of these lines out of the way. This was when it first broke 271, right there. Remember that? Boom, that got me out of it. And then then you had a little red dog reversal right here, where if you sold it at 271, you could have been a buyer at 261. Just trading the ranges, right? And then on Fed Day, they wanted to mix everybody up with, I don't even know what that was. Got really strong midday, tried to hold up, then rolled over. We were out of the way, but it made me a little bit, tentative on being too short, but whatever. And then, and then it filled this gap. This gap is no longer here. Let's get rid of it. So, now what? I guess you could draw this like this now, right? And this low here is what? 254.21. That's your new point of reference. 254.21. Maybe I just put that right here. So, I guess it could, this low, I guess you could see this area. Let's get rid of this. This would be like if the bears want to keep some control here. They reject price into this 261.20, and a lot of range trading, if that. What's Tesla doing this morning is probably up $2. It's at 257. What was yesterday's high? 260.86. So I guess the same thing is, how much do these things try and bounce? Does the early strength hold? Are they able to go green to red? Not a very interesting trade today on a Friday. If we were down 20 handles after being down 2 days, that would have been in my style, a bit more interesting. For this, if you want a shorter rally, maybe we'll see a divergence or something. But anyway, I gotta say, gold people, the gold bugs are dancing this week, and all the charts look good, and then they look good until they didn't. It just shows you the frustration in this market. It feels like every time we're looking good, you got to sell things. Every time it looks like it's cooked, they make it hard, and then they go lower. But anyway, look at gold. I remember listing this downtrend the other day, and I'm like, wow, my gold finally looks like it's going to break this downtrend, and what did it do? It pushed above and then created a tail on Fed Day, and then went right back in the base. So this is this overall big time, cup and handle, whatever, intact. It is, but it just tactically, it's just been a really tough trade. You still have this huge cup. It's building this triangle. I guess it just needs more time or not. So I'm just showing how it's all of these these asset classes have been tricky. And then bonds, thank goodness the TLTs gave you some clues. I remember over the summer when the TLTs broke 99, I'm like, guys, rates are going to matter again, because there were some dislocations. And PS, you look at the TLTs, and this was that 99, and that was when we put that summer top in. And PS now, wow, look at another gap and go to the downside. So, oh, Bon Jovi on a Friday. Anyway, now what? What's the slow here? The slow here is 90.69. Probably up a little bit this morning. 90.69. What are the TLTs doing, you guys ask me? Let's see, TLTs. Up 16 cents. So if the TLTs want to go in red and start to push below yesterday's low of 90.69, chances are the sellers will come back out and the early strength will not hold. Best thing would be the first hour, some sellers come in, try and break the spies and the Qs below yesterday's lows, and some names show some relative strength. Then you could buy the indices for a red dog reversal, cash flow bounce, and maybe some names, and go into the weekend feeling good. But if we hold here and just push a little bit higher, it's like you have to be a surgeon to make some money. But anyway, so here we are. It's September 22nd. Some guys played this small cap, downward move well. Remember, it was coming into the high end of the channel. I'm like, guys, it's been in the channel for 2 years. Don't be buying that after we played this move. And then this head and shoulders top pattern, and it was holding in here, couldn't get back above the moving averages, and finally had some downside. Now it could bounce a little bit. XLE also, top end of the channel, and everybody was talking about breakout, breakout, breakout. I'm like, guys, you have 93.30, 94. Sellers can come out, and then all of a sudden it broke below the 8 and 21 day. So now I guess we'll see if it holds this area to hold higher. But that's the kind of market we're in, guys. We're in like this range trading. Looks good, sell it. Looks horrible, maybe try and buy it. And range bound, squeezing out the excess of the last 8 to 10 years, which happens. So when that's happening, what do you have to do? You have to keep your sanity. You have to keep your state of your mind good. But how do you do that? By balancing yourself out with whatever that is to you. To me, I like to go in my sauna. I like to go in my ice barrel. A little iced coffee. I, do some things with the rec department. I watch my son play basketball and lacrosse, and try not to take things too seriously as I wait for things to show themselves. I do have 7 different accounts, so this way I'm always trying to make progress in my financial life. Whether it's every single month of 401k, every single month of 529, and then the Blood in the Street account, those are the Scott Redler accounts, and then the T3 accounts are the active, the swing, the box account, and the options. And when we're in this kind of mode, I'm just trying to make a little bit of money and not get hurt. And then when we're in a better tape, I'm trying to put a lot of money to work and look for the best stocks out there and ride it for a great sequence, and then it really adds up. So let's hope that within the next 2 to 3 weeks we find that great spot, and then all of a sudden you can see commitment to that spot, and then we can build on that spot. But for now, let's go back to the SPYs. We'll see how it goes. At this point, this left shoulder head, I remember drawing this right shoulder when it wasn't even here yet, and now all of a sudden, kind of broke. But we'll see what happens here. You would think that at some point this 200-day gets tested. Here's this 425. This is your void. Did break below this 433. So we'll see what kind of bounce back. Do we get rejected into 433? Does it want to test this gap here beforehand? Does it want to fill a little bit of the gap? That means it'll be taking its time, and we'll see. So just have your levels prior, so this way you have plan A, B, and C, and then you see what the market wants to do with it. But ultimately, you look at these trend lines, and they gave you ways to navigate it, right? This day was your day to say, hey, this is trading was horrible in here anyway. So broke below it, stayed below it, and now we'll see where the sellers reject price. This is 433. That's 436. You look where the spiders are right now. They're so basically if they want to just retest the prior low, all that is 433 right here. Okay, and if they want to push back a little bit, there's 436. Any which way, I appreciate you. Thanks for tuning in. A little special 6:30 club on a Friday. If you've been hanging out with me in the Alpha team this week, it's been a tricky week. A lot of people, there are definitely ways you could have made a lot of money, but also lost. I feel like I kind of spun in place a little bit, but that happens too. Sometimes cash is a position, and brain capital is a position, and if you took advantage of moves, great. Right now, the Chinese names are up a little bit because the Shanghai was up 2%, and so is the Hang Seng. They've been absolutely clobbered. Some guys are like, hey, what do we do with BABA? BABA's up 359 this morning. I still think you avoid it. It's a choppy mess. Yeah, could have filled this gap. Yeah, but I would not be buying BABA up into this. Oh, and lastly, ARM, the new issues. You did get a little bit of a red dog reversal here yesterday. Some people are like, oh, did you see the sneaky bounce at the end of the day? I'm like, okay, it's into where the new issue was. Thank goodness we used the art of the first day. So you go to here, showed you how to avoid this mess. And that's what it was for people who just turn on the networks, right? Bottom line is you had some decent trading here. We had a great first day, and then it gave you into a second day, and then from there it's been just trickling lower. And where could it go now? Maybe back to here, 53, 54-ish. And then that's why you have to know your stuff. Like you knew 50 was the IPO price, so that was a spot that they would probably try and support it for a trade. And for CART, that was 30. So cart, little candle towards the end of the day too. Maybe it gets to 31.50, but it broke that 38 over there. Yeah, not that interesting. But though they have to be on the radar, you have to chart them and figure out where the opportunities are there too. But there weren't the first few days. And then here's the SPY's. This that's the gap down from yesterday. Here would be just another different way to look at it. So I would say if the market tries to bounce today, this would be probably the resistance area that it's going to be hard to get through, which is that 433 to 434 area. If they want to fill this gap, then all of a sudden this process is just going to take longer, and it's going to probably go into next week. All right, I got to jump. Wow, 6:57. This was a long one. I'm babbling a little bit. It's been a long week. Anyway, have a great weekend. I appreciate you. It's going to be a little weather on the East Coast, so make sure you listen and you dress accordingly. And if you're going to be fasting and you're not going to be working Sunday, Monday, I get it. Have an easy fast. Hasta la vista, baby.